Technical analysis would not work unless you use these 3 secrets to unlock its full potential. So what is the 3 secrets? Well, welcome to this video, guys. In this video, I'll share with you 3 secrets on how you can use technical analysis to gauge on whether to buy or to sell or to do nothing about a particular stock. So I'll look at some live case studies. I'll share with you 3 secrets on the 3 ways we can use to think about buying and why we should actually use this method, right? So Joey here, top tier MyZell trader in Philip Security. So make sure you watch this video all the way to the end. You can find out these 3 secrets, right? And let's dive into it right now. Let's take a look at this stock called Microsoft and see what can we gather from these 3 secrets and applying it on this stock called Microsoft. So first off, when we use technical analysis, one of the ways we can use it is to gauge the trend of a particular stock. So how do we gauge a trend? Well, very simple. What we can do is that we can look at the highs and the lows of a particular stock. So you can see that for Microsoft, right, since last year, in fact, in 2021 November, we kind of hit the high around here, right? Hit a high around here. That was about the $340. And since then, we have been, taking lower highs. So if the highs kind of got lower, that means sellers came back and pushed prices down. It rebounded a little bit and then went down even lower. So the highs became lower and lower. You can see it went up a little bit, but then the highs went lower again. So this is what we call lower highs. And from these lower highs, what we could do is that we could also draw what we call a downward sloping channel resistance line, like right what we see over here. Can you see it? Right, so this is what we call a channel resistance line that is sloping down, connecting the highs, and pretty much right over here, 1, 2, 3, 4. So about 3-4 times we neared it, we came back down, lower highs. Not a good thing. this shows that we are a little bit of a downtrend since like end of 2021 all the way until beginning of 2023. So that's the first thing. You want to use technical analysis to gauge the trend of a counter, and if a counter is in a downtrend, like what we see from November 2021 all the way to beginning of 2023 for like more than 1 year, if you're looking to buy stocks like this, then you want to be careful because it could just go down and down and down, right? So you don't want to do that. You want to only buy stocks that show signs of a reversal from like a downtrend to an uptrend, or at least they are already in an uptrend. Does it make sense? Right? So this is the first method. You want to gauge the trend, right? You only want to think about buying stocks that are in an uptrend. So how do we know if a stock has been in an uptrend or turning into an uptrend? Well, that's what we can do. We can take a look at whether this channel resistance level that I've drawn has been broken. So for example, for like Microsoft, what we could do is you can see somewhere around here at the beginning of 2023, right? We kind of seen this, prices going above this channel resistance line. So it kind of like broke above this downward sloping red line. So that could be a sign of strength. It could potentially lead to a reversal in terms of a downtrend to an uptrend. Does it make sense? Of course, if we stay below, like for example, let's say if we continue to stay below this red line, and this might happen, it might just go down and down and down. And if you're buying and buying, then you want to be careful. You can go from from 340, it went all the way to like 220. And if you just buy all the way down, you could see that this is pretty much the downside of more than 37%. All right, so we try not to buy when it is heading down. We only think about buying when there are signs of a uptrend. So that's pretty much the first method. You need to know where is the trend, right? The first secret would be to know where is the trend just by looking at prices, making lower highs, higher lows. And for example, so you can see that right over here when we broke this channel resistance, and now it is pretty much the opposite, right? We found a low somewhere around here. So it did not actually go below this low. Let's say we find another low here, then it would be like heading lower. It would be like in a downtrend. So we did not actually find another low. So that was like the low somewhere in like September, November last year. And what happens was the low became higher. Can you see, guys, as we broke above the downward sloping channel resistance line, the low became higher. So that's a sign of strength. That shows that buyers are prepared to come back, and it rebounds a little bit, it came back down, but buyers came out and start defending a higher price level, and it actually rebounded from there. It did not like go back down to that the same low, or maybe even lower than the same low. Does it make sense, right? So buyers are prepared to buy at higher prices, and then it started to push up a little bit, and we got another low here, and the low became higher and higher. So that's a sign of the trend turning up. That's where you could potentially time your entry to get into to ride that reversal. So that's one thing about technical analysis. It's not just like random prices moving all around. We can try to gauge the trend of companies, and we try to get in along with the trend. We want to take positions that are aligned with the trend. All right, so that's what we can do, right? So let me just go ahead to remove all this. So that's pretty much the first secret. You want to use technical analysis to gauge the trend and try to be in the same direction as the trend at least, right? Rather than going against the trend. Does it make sense? All right, so that's what you could do. Next thing is that now that we have kind of like gauged the trend, right? It's turned from a down to a bit of an uptrend over the past few months, and we are seeing a little bit of weakness. So we want to try to time our entry to get in on dips, right, near what we call a support level, whereby, because as it moves up, doesn't mean it moves up every single day. You can see that as it moves up, we retrace back down, went up, we retrace back down, same thing, we trace back down, and now we retrace back down a little bit. So as it moves up, it doesn't just go up every single day or week or month, right? It can also retrace back down as well, and that's healthy, because in a healthy uptrend, there's some profit taking along the way. It might retrace back down a little bit, and it consolidates at a higher support level. It is still okay, right? As long as it stays above certain key supports, rather than just going up every day, then you want to be careful because there's no supports being found. All right, so in an uptrend, it is okay to see some retracements as it consolidates, and then that will be a healthy uptrend because we find a new support that is higher, all right, than the previous support as it moves forward. All right, so let's take a look at what we could do right now. We could draw what we call horizontal support and resistance line. So you can see right over here, that would be like a resistance level. So resistance is something whereby it hits the level, and then sellers came back and push it back down. So it's something like the ceiling, right? You throw a ball, it comes back down. So that's where, and if it hits to a resistance level again, selling can actually happen. So it guides you on probably to get out, take some profit near resistance, because that is where prices have sold off as it neared there before, and it might happen again. Right, so we draw what we call horizontal support and resistance line, and we draw another line right here. You can see that this is what we call a support level. So let me just turn it to green in color and explain to you why do we draw this line? How do we even draw it? Well, you can see that when we draw horizontal support and resistance level, you can see that this was where we actually found some support somewhere in 2021, and when we broke down this support, you can see we actually swing down, we rebounded, retested, went down, rebounded, retested. You can see that. So this was the support turn resistance level. Can you see, guys? So the support turn resistance, we give a little bit more weight to it, and that's where the downtrend actually happened. So all the way back down. So that was a pretty key level. I would say somewhere around that 315, 320 level. I mean, for this stock right here, Microsoft, it was a pretty key level. So support turn resistance, and you can see somewhere around like in May, all right, same thing, we broke this resistance. So it was like a resistance, we broke up, and it started to trade all the way back. I mean, of course, now we are making our way back down again. But as we make our way back down, can you guys see that as we make our way back down, all right, where did we actually hit to before some buying pressure came back again? Well, we hit it all the way down to here, and somewhere around that same spot again, 315, 320, we saw a couple of good bullish candlestick patterns. I'm not talking about candlestick today, right? That is just a bit more advanced, but essentially, right, we came back down to that same level, right, that more than a year back it was a support, it became resistance, we broke above, we are now back down, and it's now the support level. So we kind of headed back down there, and buyers came out, and that's where we start to see a bit of a rebound as well. So that's the next thing you can take a look at for technical analysis. After looking at the trend, you want to try to draw what we call horizontal price level to gauge where are the support and resistance. Where can we potentially head to if it were to dip? For example, as I mentioned, in an uptrend, it doesn't go up every single day. If it does dip, great, then it could be a good opportunity to get in again. But the answer is, the question is where can it dip to, such that you can think about timing your entry to get it. Does it make sense? Rather than just let it dip and dip and dip, you have no idea where to actually get it, right? So think about where we could potentially dip before you could time your entry to get in. So once you have drawn these lines, then you can gauge that could be a level like 315, 320, but it doesn't mean it dipped to the level means it will surely rebound. No, we do want to look for certain things. We can look for certain candlestick, and we can look at the short-term trend and as well, right? That's what we can look at to see if that support holds, and it could be a potential rebound from that support level. So that's the first thing, right? The next thing, right? Sorry. So first thing, the trend. Second thing, you can draw what we call horizontal support and resistance lines to gauge where it could potentially dip to before you time your entry to get in. So what is that third secret that I like to share with you guys regarding like timing or entry to getting well. You can see that, okay, so in terms of the longer term trend, I won't cover it in another video, but you can see that for this stock right here, I've placed and pull out this green line. So this green line, so let me just remove all this thing, right? So this green line is what we call a 20 days moving average. So a 20 days moving average, it kind of is a line that takes the average of prices over the past 20 days. It's more like a short-term 20 days moving average, and you can see that it follows prices quite close. The price moves up, it moves up as well, it moves down, it moves down as well. So you can see like somewhere around here, I'll not go too far, maybe like somewhere around here when we sold off as the 20 days moving average started to point down. With the price below it, you can see we started to sell all the way down. Does it make sense? All right, so take note of when the 20 days moving average line is pointing. Is the line going up? Is the line pointing sideways? Is the line pointing down? All right, so that's the first thing, right? The next thing would be if the line is like pointing up or down, sideways, where are the prices in relation to that line? So if, like in this case right over here, when it's sold off, if the line is pointing down and then the price is below it, it's not so good. It just shows that a bit of short-term weakness, and we could really start to see prices going down and down until somewhere around here you can see that the 20 days moving average started to flatten out. Okay, good. That shows a bit of stability, a bit of the short-term trend turning from down to a bit of a sideways. So engage in terms of the short-term trend, and look at this right here. So somewhere around here as well, as we started to move up, I mean of course breaking that channel resistance level that I talked about, the trend turning up and all that, right? You can see that somewhere around here as well, the 20 days moving average started to turn up. Look at this, right? This green line was pretty much turning up all the way with prices. So I say, right, the line is pointing up, that's one thing, but we want the price to be above that line as well. So with the line pointing up and prices being above the 20 days moving average, you can see that we started to trade all the way up, all the way up until here. And then over the past like 1 month, what do you guys think about the 20 days moving average? You can see that this 20 days moving average started to point up, slightly flat, and it started to point down. Yes, correct. So that's the reason why we sold off in the short term, right? But selling off doesn't mean like selling all the way down, right? We could sell off to a support level that I talk about, which is pretty much the same level, and some stability or some bargain hunting comes back again, right? So the question is, what do we do right now? Is the 20 days moving average still pointing down? Is it pointing up, right? So we can see that right now, I mean, after getting this support level, you can see that this 20 days moving average from pointing down, so it was a bit of a downtrend because you can see we sold off, the line was pointing down, prices below it, so it went down. And the next thing is that you can see that this 20 days moving average has started to, is it pointing down? I mean, no, right? I mean, it's like flattening, right? It's like flattening. So I would say that the short-term trend has kind of turned from like down to a bit of sideways. Does it make sense? So there is some stability. And why? Because as I say, we have already hit to this support level, this support level around 315 to 320, which is pretty much what we have covered just now. So where could be a potential entry? Why would you want to take a look at this stock? Well, because now that the 20 days moving average is pointing sideways, it's not like pointing down. I mean, it's still pointing down and down and down. Well, then you want to be careful because there could be more short-term weakness. And in fact, if we do break that 315 or 310 support level, well, I would say that this 20 days moving average would continue to point down, all right? But no, all right, if we found some support and this 20 days moving average is starting to actually flatten out. In fact, it's already flattening out. So let me just draw it for you right now, what we could do. So same thing like what we see over here is flattening out and then it starts to point up. Same thing over here, it flattens out, starts to point up. So as it starts to point up, right, as it starts to point up, so I'm not too sure what will happen, whether you point up next week or not, but let's just say it starts to slowly flatten out and it starts to slowly point up. Does it make sense, guys? If it does start to slowly gradually point up with the prices above, like what I mentioned, right, with the prices above the 20 days moving average, well, then that could be a sign of the short term. I say again, the 20 days moving average is short term. That could be a sign of the short term trend now turning up, and that's where potentially we can start to see the reversal happening all the way back to where? Well, back to that same resistance level that we have drawn just now. Well, because that was the level that we have headed there last month, and then we sold off. So that's where some selling pressure can actually come back again. Alright, so that's how we can use this short-term 20 days moving average to guide us in terms of where would the short-term trend be right now, and whether do you want to take a position, do you want it to turn up. I mean, it's up to you. Alright, you need to have a plan. Of course, that's a little bit more advanced, but these are pretty much the 3 secrets that I want to share with you today, just to guide you a little bit. You look at the trend, you look at some of the key things like the support and resistance, just to guide you on where we could potentially head to on retracement, or where we could potentially rebound to, and some selling can happen. And lastly, we talk about the short-term moving average as to how it can guide you in terms of the short-term trend turning up, and how it can guide you on getting in as well to ride the reversal. Alright, so Joey here. I hope you found this video useful. Just dive a little bit into technical analysis. If you like this video, guys, go ahead to give me a like and smash the subscribe button as well. That will definitely help out this channel, and I hope that you will watch next videos as well. I'll do some more videos for you every week as well. And hit the subscribe button, like it. Joey here. Thank you so much for watching. And if you want to find out a little bit more on like the whole entire framework and strategy that we're using, and we do have a system that picks out stocks and filters out stock for us and guides us on entry and exit. And if you want to find out a little bit more on that, click on the link around this video or below it. I'll place the link right there. You can attend one of our free webinars to learn more, and this way I'll share with you a bit more on the entire framework, the one good trend framework, and how you can also have access to this 1GT, one good trend system, to guide you on entry and exit. So Joey here. Thank you so much for watching. I'll see you in the next video. Take care.